It seems likely that the Fed will enact one more rate hike this month and then put a pause to rate hikes throughout the end of the year. In fact, according to the CME's FedWatch tool, there's a 99.8% probability of a rate hike this month, an 86.4% probability of no rate hike in September, a 73.8% probability that there will be no rate hike in November, and a 66.8% probability that they will leave rates where they are in December. Hello traders, Gary Wagner here, 12:05 in Honolulu, 6:05 in New York on Wednesday, 19th day of July 2023, and this is the Daily Report for gold and silver. Gold is trading fractionally lower, down by 40 cents today, with the most active August contract fixed at $1,980.40. Although gold closed just below yesterday's close, down 40 cents on the day, it did find resistance at the 38.2% fib retracement that we spoke about yesterday at $1,980.70. Although gold did close fractionally lower and found resistance at approximately $1,980, there is certainly a case to be made for the fact that we could see gold move higher and actually challenge $2,000 per ounce, a key and critical psychological price point. Currently, I'm looking at support coming in at $1,963, which is where both the 100 and 50-day moving averages are currently fixed at. Which brings me to one big caveat. It does appear we could see a death cross if the 50-day crosses below the 100-day moving average. But when we look at this weekly chart, gold has been in a defined uptrend beginning 4 weeks ago when it hit this low at 1900 and never looked back, with our first real level of resistance potentially coming in at $2,000 per ounce. However, the course of gold, direction of gold, and magnitude of those moves will be predicated on what the Federal Reserve does. As we talk about in today's opening letter, according to the CME's FedWatch tool, there is a reasonable probability that this rate hike occurring on the 26th or next week will be the last rate hike of 2023. If that is the case, I believe that will be extremely bullish for gold, with absolute bullish market sentiment developing if they allude to any rate cuts in the near future. This fractional decline occurs in conjunction with moderate dollar strength. The dollar is currently trading up by 0.36%, and the index is just below 100 at 99.98. Although I'm becoming bullish on gold, I do have to acknowledge, just as when we pointed out that the dollar was extremely top-heavy and would come down considerably, I am now projecting that we could have found some technical support roughly at 99 on the dollar index. On our weekly chart, we have a double bottom or tweezer bottoms in terms of a candlestick pattern. That could be indicative of a technical level of support. If we go back historically, we can see that this price point did mark a point of resistance until it broke above that, and this was back in March of 2022. Silver is also trading fractionally higher, up 4 cents on the day, with the most active September contract fixed at $25.36. After last week's phenomenal move in silver, I'm not surprised that we have seen the action quiet down considerably this week. I am still looking at the potential for higher silver prices. With silver not finding resistance, until about $26 per ounce. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.